Why markets are blindly expecting the best, but inflation might not cool to 2% until this confirmed huge crash happens in 2023. Oil price recently fell under $80 per barrel. This is normal oil price behavior. Look at last year's oil price chart. Oil price started to slip under $80 at the start of November, and it made a bottom at the end of November 2021 for about $65 per barrel. Then the new year comes, and it never looked back. Biden administration has to pretty much drain the entire strategic petroleum reserve to lower the gas price and oil price until now. We are right back under $80 a barrel again. Would oil price go to $65 a barrel again? Then keeps going down to 60, 50, 40, like the financial crisis? Or are we going back higher? Because we still don't have the extra refining capacity. Where does inflation go in that case? If the oil price can stay down, why does Warren Buffett keep adding Occidental Petroleum stock and Chevron stock? He has 12% of his portfolio being oil and gas stocks. It's higher than his second biggest position, Bank of America. Only takes up 10% of the Berkshire Hathaway's portfolio. He already said that Apple and Coca-Cola are the kind of companies that are inflation resistant. Why I think markets are blindly expecting the best right now. Why this is not the way to get inflation down. Why inflation might not cool to 2%. Until this confirmed huge crash happens in 2023. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? You can't put it back together. Jim Rickards warns of unstoppable crisis worse than 2008? 6-time best-selling financial author James Rickards says why a huge crash is already a certainty sometime in 2023. In a nutshell, broken supply chains have already caused big inflation, and the Fed is raising rates to tamp it back down. On top of the perfect storm of inflation and prolonged supply problems, we have the recent meltdown of the FTX cryptocurrency exchange. Rickards says, it is definitely going to cause sequential collapses in the crypto world, but will it jump the fence into the broader financial world? My expectation is it will. But it can take 6 months or more to play out. We probably have an acute global financial crisis coming anyways. If FTX never existed, I would say we are staring at the worst financial crisis than 2008. Throw FTX on top of that, and it's like throwing gasoline on a fire. It will accelerate the fire. So we're probably going to have problems anyways. But the FTX implosion just makes it worse. As far as the dwindling supply chains, Rickard says, the old supply chain has collapsed. A new supply chain will emerge. Right now, we are in a very messy middle period where things don't work well. It's like a vase. You don't knock over a vase, and it breaks into 5,000 pieces. You can't put it back together. You got to go and get a new vase. We broke the vase, and we are shopping for a new one. We are not there yet. We are just cleaning up the mess. Russia invades Ukraine. The Ukrainian plastic conduit factory shuts down, and all of a sudden, the BMW production lines are shut down because they cannot get parts. Again, this is another example of how this is all falling apart. And it's not going to be put back together quickly. There will be a new supply chain. And I call it supply chain 2.0. But we are in that in-between time. And it's going to be just a mess. Rickard says the Fed is going to keep raising rates because that is what they keep telling the public. They are telling us what they are going to do. And you should believe them. Rickard says we do have inflation. And it's going to be with us for a while. But we are also going to get deflation too. Rickard points out. Why does Warren Buffett and Berkshire Hathaway have $130 billion in cash? Buffett is one of the greatest investors of all time. Why isn't he out there buying any stocks? Again, why does he have $130 billion in cash? It's because Buffett sees what I see. Yes, this thing is going to completely crash. It's a really good idea to have cash because you can go shopping in the wreckage and pick up some bargains. My point is, we don't have to guess. Look at the Treasury yield curve. Look at other metrics. And guess what it looks like? It looks like 2007. Everything I am describing, but not quite as extreme, by the way, was true in 2007. Except now, the inversion is even worse. Which means we are in for a worse crisis than 2008. It's coming. Everything I said has nothing to do with FTX. Throw FTX on top, and as I said, you are throwing gasoline on a fire. After the inflation, Rickard says count on big deflation. Markets are blindly expecting the best, but inflation might not cool to the Fed's 2% target until late 2024. Inflation could remain a threat to markets for another 2 years, despite the recent rally in equities, according to the Federated Hermes top stock picker. Phil Orlando, the investment manager's chief strategist, said in a recent interview that the bounce in stocks after the October inflation print showed that investors were blindly hoping for the best outcome, even though prices could remain above the Federal Reserve's target until the end of 2024. The Consumer Price Index rose by a lower than expected 7.7% last month, offering markets the strongest sign yet that inflation is starting to fall. That sparked a stock market rally, with the benchmark S&P 500 up 7.4% since October's inflation figure was released on November 10th. But Orlando said that investors haven't appreciated how sticky inflation could be, with entrenched high prices likely to require the Fed to push rates above 5%. If the Fed brings the fund rates up to 5%, let's say by the end of March, but inflation is still above that, let's say 6.5% or 7%. Does the Fed go on pause and make the heroic assumption that inflation is going to continue to grind lower? He asked. Frankly, we don't know what's going to happen in the second quarter of next year, because we don't know what the trajectory of this decline in inflation is. So there's a lot that needs to happen, a lot of moving parts. Right now, the market is whistling past the graveyard and expecting the best things to happen. Our best guess is that we will get back to the 2% eventually. But that trajectory might be by the end of calendar 2024. In my humble opinion, if we don't get that technically confirmed huge crash in 2023, inflation will stick around till mid-2024. So be prepared. Just follow Warren Buffett. Prepare for the deflation with the physical cash pile. Prepare for inflation with companies like Coca-Cola. My client, Teddy Eazzy's erotic novel, Wicked Pussy Perfume, such an amazing book. And my book, Abundance. It is a bestseller. You are such a good boy for watching my video right till the end. Bye.